and welcome to another live stream and another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Thursday afternoon. I hope you all had a great week so far. As always, before we jump into the markets and into my portfolio, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using in this live stream, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I always truly recommend is, if you haven't done so, go and check out the Elliott Wave Principle. You can read this wonderful book for free online when you use the link in the description down below, and you can use the same link to get yourself a physical copy as well. With that said, we can jump into my portfolio. And as you can see, we have a slightly green start into the day, mostly, of course, because of our GameStop position, which is the biggest exposure or the biggest position in the portfolio right now. So let's start there, actually. So as I explained, or as we worked out yesterday, we believe, or I believe, that we have basically a 5-wave impulse wave where we finished wave 1, 2, 3, and are currently either at the end of wave 4 or in progress of wave 4. We'll see basically in a couple of days if this turns into A, B, C, and we get another 5 waves down, or if this turns into 1, 2, 3, and the correction actually finished here. It's going to be interesting. If it were to be A, B, C, we can roughly guesstimate the target areas, and we would expect then GameStop to basically reach 28.18 to 29.34, and then in that area, basically then after that, turn around again. If we break substantially through this area, it's not guaranteed yet, but likely that we are actually done with the correction and are already in wave 5, in which case we have our profit areas here in the area of 36.48 to 44.62 for that 5th wave move. So not much changed. Obviously, since yesterday we only got 3 new candles on the chart. We'll have to wait and see how it develops. But that's basically my opinion about GameStop right now. We're still bullish. If we would have, we actually, once the market opens in 50 or 45 seconds, we'll take a look at if there is a scenario or a way for us to roll our options, basically realize the 80% profit on those call options, and instead or simultaneously write new options, ideally for a new credit. There's not much point in looking into anything else in those 30 seconds, so we'll just wait and see. As you can see in the background, by the way, I'm still living in chaos, in quotes. We're still not done fully setting up the studio and the rest of our apartment. Making huge progress. Got the recording desk yesterday and set it up partially now in the morning. Still have to deal with wires and stuff, and then with the positioning of the recording desk. And we still obviously have to work on the background for the streaming setup here and for the recording desk. Anyway, now markets are open. We can check now. So we have the February 28th $40 calls that we sold. So we use the strategy builder and interactive broker here, and we say if we would buy them back and roll our options, for example, what would be March 14th would be 43 days. So if we would roll them out just by a week, strikes, we want to see all. Why do we not see all strikes? Is there the highest really? Custom. Okay, so instead of all, let's just select the 40 strike here. There's no 40 strike. Am I missing something? So 37 would be the highest, and the premium for that would be relatively low. That seems weird, so I'm gonna check on 1 second on option strat. I'm gonna bring over another window here. We are right now here, option strat. Yeah, so also linked down below. And so let's just go optimize GameStop, and then we set March. 1 second. We set March 14th. No active options for this stock for expiration, huh? Like you're literally offering, that's for optimize, of course. Build hard call, GameStop, March 14th. There is highest is actually the 37 strike price. Quite weird. But yeah, so we cannot roll them here, and if we were to roll them, we actually, we could still get a credit here. So if we roll them, we get $45, 45 times 6, $270, but we also lose potentially $1,800 if GameStop rallies. So if we could obviously also try to switch to a low or a shorter expiration. So instead of rolling it this way, rolling them down and closer, but that leaves us with the problem that if this is not A, B, C, and we go further down temporarily, that we probably would get them called away. So, but yeah, $30. Let's see which $30 strike price. So here, if we roll for 30, but that's far out. Now, come on, mid. And if we instead go closer, so January 31st would be tomorrow. That obviously would be a debit. We would have to pay for that. No point in doing it. February 7th would still be a debit. February 14th would give us basically $50. Oh, no, more actually, $150 already. But we lose a lot if we actually rally up. Yeah, so tricky decision. Yeah, so we obviously can wait, but every day we wait, the options also, I mean, our $40 calls appreciate more unless we get a strong rally up. But also the premium we get for example, the February 8 call options gets lower. Yeah, there would be a benefit in writing the February 8 calls because it means on February 8 the options expire and we have our position in quotes untouched unless we rally above 30 or whatever strike price we pick. To write new call options. On the other hand, theta decay, so the value decay of the options is, in my opinion, the biggest between 45 and 30 days. So by picking the March 14 option, we actually have the biggest decay there. However, it's a longer time, which means we have to account for if there's a strong upwards move. Then we likely, especially if we say February 14th, where it would be, March 14th, would that be? Yeah, March. Yep, March 14th. So we would already be here and we would say, okay, we stay below 40, or in that case, we actually were saying we stay below 37. So we stay below here until March 14th, so until here. Which obviously has its risk, because if the correction is over here at the 50% retracement, we get 1, 2, 3, 4, 5, and then we very likely are above or in the target area before March 14. And we risk getting our shares called away and missing out on extra profit. On the other hand, now we don't get a quote here. Bid, ask, okay. Yeah, so there's no bid for those options right now, which is a little bit meh. If we go to the next regular expiration, it would be 50 days, which is a little bit further out. So that would be March 21st. There should be volume, and there should also be a $40 strike price. So if we just roll them here, we get around $300, which is pretty much almost enough to clean out our negative balance. But that would be March 25th. So if we add another, let's scale that a little bit up, another extended vertical line on March 25th. So around here. Can I extend that in both? Extend. Okay, so it is extended now. Okay, so yeah. So if we make that move, we basically would say, okay, we gamble that GameStop stays below 40 until March 24th. However, we would be able, as said, to pocket around $300 in premium. Now let's say if we could get 500 by 6, so 83 plus 1, so I would do it for 0.84, but that negative 0.84, and we obviously would have 6 pieces. So we would after fees, sorry, I have to drink something. After fees, we would pocket basically $500. Not sure if that gets to trigger. And again, if we get $500, it's less than $100, which means like if we reach 41, we already start to miss out on extra profit. Yeah, what's the dumbest play here? So, and if GameStop starts to move up, especially if we're a strong move up, we might still have, I mean, not too strong, but strong enough, the money we pay or the money we get for the March 21st option might be, can I roll it every week then? But what do I get weekly? So March 14, we said we have the problem that there is no volume, so no open interest, and no 40 strike price. Here we are in the 50-day range, so we actually, I think we're going to hold them for another week. So there's a little bit more appreciation, although we're already at 80%. So, and now I closed options thread again. Okay, let's bring it over again. That one we don't have anymore, so we're just gonna, in that case, delete it. I don't remember when we closed it. So next week would be the February 7. So on February 7, the curve looks like this. So we only would realize a little bit more than we would right now, or yeah, at the current price. So tricky. Yeah. Yeah, I think we'll wait. So I think we'll wait. So, but here, how's the price developing? So yeah, like falling a little bit. So for that combi, okay, we keep that open for now, but we'll wait. Yeah. By the way, it looks like we have a green day today. Yeah. So a lot of things are green. H&T rallying a little bit. That's nice. So after dumping before, so we're on a weekly chart here. So that's nice. Bitcoin also moving further up. I think again we'll get at least another push here. Might even be more. Anyway. Barnes & Noble Education Inc., we already also redid the labeling, if I'm not mistaken. We're not sure 100% about this area here, but because of the previous area, there is decent hope for further upside. Our profit target actually is in the, yeah, like, no, not this one, but we don't have it on the chart. Our profit area is actually in the $17 area. That's why we also have the calls sold against it. Immersion, yeah, that we still will have to relabel, so we're not 100% sure about the correction right now. We're relatively, oh, we also have to relabel the bigger part before. Okay, we didn't do that. Maybe we do that today, so we actually get something done. So let's start with a monthly chart. Okay, that's unchanged, and then from the monthly chart, weekly chart, so we get our 0.2, and we assume that we might have 1, 2, 3, 4, 5. Right now we are tracing this, so we still expect potential 669. Okay, actually there's not much to label. Yeah, so we already did that apparently. So in immersion, I would not be surprised if we get another push into this area here. So between 50% and 61.8% retracement before we continue our journey further up. Yeah. Did we also do that in costs already? No, in costs we are a little bit more clueless. We're not going to deal with that today. And in NEO we are a little bit stumped, but there I'm not sure if we looked at the bigger picture. It's actually weird because that's like 1, 2, 3. So if we look on a monthly chart, so do we hit our usual price target? Yeah, we fall into the area 238.2, 261.8, which is likely the third wave. If we use Kennedy channeling technique, it probably also checks out like this. but the fourth wave is substantial. So let's check if we, our base channel would look like this. And the breakout from the base channel confirms in quotes wave 3, which means we would be looking at, okay, it cannot be an impulse anymore. So it would be, in that case, leading diagonal. And 4 might be the low here. And then we get a wave 5 somewhere. But it's not super nice. So especially also because of the duration. So this here happened very fast, and then wave 4 is just so much longer. So take this labeling with a grain of salt. We already retraced more than 61.8%. I think we talked about it in one of the last streams, yeah. So let's actually get rid of some of the things here and then reevaluate based on what we can find right now. So yeah, let's get rid of those. And if somehow this would be a free wave corrective move, it's hard to see this overall properly, yeah, or to see a pattern here overall. But then we'll also see, yeah, I mean, we reached the minimum target for the third wave, if that would be A, B, C in some way. So don't need this, don't need that for now. So can put that here-ish. And then here we can already remove basically those. And actually here we can keep the 100% for now. So for potential further downside. So which means we would label from here. And then here we have the same thing that if we look at here, I mean, we turn around here to 2618. So, but let's zoom in a little bit further. I don't think, or maybe, if this here is our 0.2 and potentially this here might be our 0.4, then that's our 0.3. And okay, maybe need even a daily chart. So 0.2, our potential 0.4, and our potential 0.3. Then I'm stupid. 2 sorry. Yeah, no, 0.2. Sorry, the other way. 0.1, our potential 0.3. Sorry, I was confused for a second here. With a parallel through 0.2, and the breakout here to the bottom would indicate wave 4. So it is possible that this here is actually 1, 2, 3 flat correction, and then that obviously doesn't go up there into the nirvana. Okay, then we'll have to label this differently. 1 second. So since it tries to automatically connect things, so that would be 1. That would be 2. That would be 3, probably here. That would be 4, and that would be wave 5. Now, are we also hitting our wave 5 target area? Yes, we do. We hit our 100% target area here, so we can remove this and this. Which means we would right now be retracing this entire move. And we already hit the 78.6 retracement. So everything else, I did not expect that. So we got parts of this right and parts of this wrong. Now the question is, how does this correction subdivide? Right now, my best guess would probably be like this, which means we would have further potential downside, almost to the point where the pattern becomes invalid, unless it subdivides like this. Then we would be exactly within the target area, which makes probably maybe more sense. Yeah, so we would actually expect that this here, if we move further in 8 hours, let's check an hourly chart. 1, 2, 3, 4, 5, yeah, A, B, C. So we actually would potentially expect that on the very small scale, that would be the next wave 1, 2, and we are about to get wave 3 up, which means extension-wise, switching tools. Come on. And then zooming out again. We were on a daily chart or not, yeah. So if that's correct, oh, there's even a bigger one here. So that would be, we can go based on that one. So if this is indeed the end of the correction, we would actually expect the next rally to go to 528, 542. So we'll keep that on the chart for now. And with that, we actually have an updated chart for NEO as well, where we hold an astonishing 100 shares. Yeah, moving on. Yeah, let's take a look at costs yearly. Not sure if that is a fluke. Cost January 2009. That seems to be wrong. Oh no, it's November 28, 29. Okay. So, but looking at the chart here, we only had the rally in January. So similar to GameStop. So the data source from Interactive Brokers seems to have some wrong information in there. Actually, there might have been $6.12, and we are right now at $6.35. Okay, so it's showing the reasonably accurate history, but there it was basically till 21, it was like below 3. And here it is showing higher. So I don't know what's wrong here. So somewhere we have a data fluke that makes it hard to label this because we don't have the same history. Tricky. Okay, so we're gonna clean out that labeling for now, just so that we don't get confused by it. We can close this, and yeah. Now Bitcoin, we also, I'm not sure I want to deal with that today, but visually that looks like it was another part of a 5-wave impulse, A, B, C, corrective pattern, and now we get another push up. So there should be another 10-20% here before we are going to close our small Bitcoin position in my Coinbase account. H&T, we're still holding, although temporarily there might be another push down into this area, so keep that in mind. StoreJ, we already got out of. A little too early, if I recall it correctly, but we're still keeping. Okay, we will label this another time, and I think we'll call it a day. Yeah, like we got a few updates on the chart. No changes to the portfolio. Again, I could potentially consider rolling my calls, but I don't necessarily want to roll them 50 days because, again, from my understanding, the theta decay hits the most between 45 and 30 days. So if we roll them in a week, then we actually will roll them into 42-day area, which means we should then benefit the most from theta decay. However, we probably will not, depending on the price movement, so the price of our existing option changes, but yeah, should still be fine overall because we're rolling out for more time, and for more time means we should earn an extra premium for that. And yeah, so with that, I'm going to say that's it for today. Thanks for stopping by. I hope you were able to take something away from today's stream. And as always, looking forward to seeing you in one of my future streams as well. And don't forget, like you just saw, like, subscribe, enable notifications. And yeah, have a great rest of the day. Until tomorrow. Bye-bye.